Imagine this for a moment. Every single month, money quietly leaves your bank account. Rent, groceries, phone bills, streaming subscriptions, insurance, transportation. It feels routine, almost invisible. You don't think twice about it, because this is just life. But what if I told you that inside these ordinary monthly expenses is a powerful wealth strategy, one that most people completely overlook? A strategy that doesn't require a higher salary, risky investments, or winning the lottery. A strategy already happening in your financial life right now, whether you realize it or not. Most people believe wealth is built only through big actions, massive investments, side hustles, or dramatic lifestyle changes. But research consistently shows that long-term financial outcomes are shaped far more by small, repeated behaviors than by occasional big wins. And monthly expenses, those predictable, recurring payments, are one of the strongest forces shaping your financial future, not because they're bad, but because they're powerful. Today, we're uncovering how ordinary expenses can quietly work against you, or become one of the smartest wealth-building tools you'll ever use. Stay with me, because by the end of this video, you'll never look at your monthly bills the same way again. At its core, wealth is not about how much money you make. It's about how much control you have over where your money goes and how long it stays working for you. According to data from the U.S. Bureau of Labor Statistics, the average household spends roughly 60 to 70% of its income on fixed and semi-fixed expenses like housing, transportation, food, insurance, utilities, and debt payments. That means the majority of your financial life is already decided before you even think about saving or investing. If wealth building feels difficult, it's often because most of your income is already spoken for. But here's the key insight: anything that happens every month compounds. We usually hear the word compounding in the context of investments, but the same principle applies to spending. A recurring expense repeated 12 times a year for decades has more impact than a one-time splurge. This is where the hidden strategy begins. Let's start with housing, typically the largest monthly expense. Financial planners often reference the 30% rule, suggesting that housing costs should not exceed 30% of gross income. While not perfect, this guideline exists for a reason. Housing costs that creep higher don't just reduce comfort, they reduce long-term financial flexibility. A difference of just $300 per month in rent or mortgage may not feel dramatic in the moment, but over a 30-year period, that's $108,000 in cash flow before considering what that money could have earned if invested. At a modest 6% annual return, that same $300 monthly difference could grow to over $300,000. That's the power of ordinary expenses over time. Transportation is another major example. The average new car payment in the United States now exceeds $700 per month, according to recent industry data. When you add insurance, fuel, maintenance, and depreciation, transportation can quietly become a wealth drain. Cars lose value over time. This is not speculation, it's documented depreciation. Choosing a reliable used car instead of an expensive new one does. Means sacrificing quality. It often means buying time and freedom. Lower transportation costs create room for savings that compound in the background, year after year. Now let's talk about something even more subtle: lifestyle inflation. As income rises, expenses tend to rise with it. This phenomenon is well documented in behavioral economics. People don't usually save raises, they spend them. A better apartment, more subscriptions, upgraded devices, premium services. None of these feel reckless on their own. But when expenses scale with income, wealth remains elusive no matter how much you earn. The hidden strategy is to anchor your core monthly expenses below your income growth. When raises or bonuses arrive, the gap between income and expenses widens instead of staying the same. That gap is where wealth quietly forms. Subscriptions are a perfect micro-example of this. Streaming platforms, software tools, delivery services, fitness apps individually. They're small, but collectively, they represent a growing category of recurring expenses. Studies show that many people underestimate their subscription spending by hundreds of dollars per year, not because they're careless, but because subscriptions are designed to be invisible. Once automated, they fade into the background. This is where awareness becomes power. A monthly expense that feels insignificant today can represent tens of thousands of dollars over a lifetime. Eliminating or optimizing even a few subscriptions can redirect money into long-term goals without any dramatic lifestyle change. Food spending offers another powerful lesson. According to government data, food is one of the most flexible major expense categories. The difference between frequent dining out and home cooking can easily reach several $100s per month. Again, the wealth strategy isn't about deprivation. It's about intentionality. People who build wealth tend to align spending with values rather than convenience alone. Cooking at home more often doesn't just save money. It builds a system where money flows more predictably. Predictability is crucial. Monthly expenses that are stable and intentional reduce financial stress, which in turn improves decision-making. Research in behavioral finance shows that financial stress reduces cognitive bandwidth, making it harder to plan, invest, and think long-term. By simplifying and optimizing expenses, you're not just saving money, you're improving your ability to make smarter financial choices. Insurance is another area where ordinary expenses hide extraordinary leverage. Health insurance, auto insurance, home insurance, these are not optional. But overpaying due to outdated policies or unreviewed plans is surprisingly common. Studies by consumer advocacy groups consistently show that people who review insurance policy every 1 to 2 years often find meaningful savings or better coverage for similar costs. This isn't about cutting protection, it's about aligning coverage with current reality. Debt payments may be the most critical monthly expense of all. High-interest debt, especially credit card debt, works directly against wealth building. With average credit card interest rates exceeding 20% in many countries, carrying balances means compounding is working against you. Every month, interest consumes future income. Redirecting even small amounts toward principal reduction can dramatically shorten payoff timelines and free up cash flow sooner. What all these examples have in common is not frugality, it's leverage. Monthly expenses represent leverage because they repeat automatically. When optimized, they free resources. When ignored, they quietly extract wealth. Now let's flip the perspective. What if monthly expenses could actively build wealth instead of draining it? This is where the strategy becomes proactive. Consider expenses that create long-term value. Education-related spending, when aligned with real skill development, often produces measurable returns over a lifetime. Reliable transportation that enables consistent work and opportunity is not a liability, it's infrastructure. Preventive healthcare costs may reduce long-term medical expenses and income disruptions. These are expenses that protect or enhance earning power. Even investing itself can become a monthly expense. Automated contributions to retirement accounts or index funds transform saving into a predictable system. Research from investment firms consistently shows that people who automate investing contribute more and stay invested longer than those who rely on manual decisions. Treating investing like a bill you pay to your future self is one of the most effective wealth strategies ever studied. What separates people who build wealth from those who struggle is not perfection, it's alignment. Their expenses reflect long-term priorities, not short-term impulses. They don't eliminate joy or comfort. They remove friction between income and goals. The psychological shift is subtle but powerful. Instead of asking, "How can I cut costs?" the better question becomes, "Which expenses deserve to exist every month of my life?" That question changes everything. Because once an expense earns a permanent place in your budget, it should justify itself over time. There's also an often overlooked emotional benefit. When expenses are intentional, guilt disappears. You enjoy what you spend on because it aligns with your values. This reduces the cycle of impulsive spending followed by regret, a pattern that research links to poorer financial outcomes. Over decades, this approach compounds in ways that are difficult to see day to day. Lower fixed expenses increase savings rates. Higher savings rates increase investment growth. Greater investment growth increases optionality, choices about work, lifestyle, and time. This is not theory. It's supported by long-term studies on household finances and retirement outcomes. Perhaps the most empowering part is this: you don't need to change everything at once. Wealth is rarely built through sudden transformations. It's built through systems that quietly run in the background. Monthly expenses are already a system. The hidden strategy is simply to redesign that system intentionally. Take a moment and think about your own expenses, not with judgment, but with curiosity. Which ones are silently shaping your future? Which ones protect your time, health, and earning power? Which ones exist out of habit rather than purpose? When you start asking those questions, money stops being stressful and starts becoming strategic. And that's the real secret. Wealth isn't hidden in exotic investments or extreme sacrifice. It's hidden in the ordinary. In the bills you pay without thinking. In the choices you repeat every month. In the systems you build, not the splurges you resist. If this perspective changed the way you see your money, imagine what consistent insights like this could do over time. If you enjoyed this video and want more content that helps you think smarter about money, wealth, and long-term freedom, make sure to like this video. It really helps the channel grow. Subscribe so you don't miss future deep dives into personal finance strategies that actually work. And stay connected, because the smartest financial moves are often the quietest ones, and we're here to uncover them together. Thanks for watching.